Hello, zamni sajo khansa shuwe chuka sumgi Philippines yongla chamdi tashi dile shuwe yi nyingi yendo sinsi nange changma kusu dewa ingire.
It's unlikely that the gold price will simply fall in a straight line in the future. Rather, it's more realistic to expect fluctuations, ups and downs, depending on macroeconomic, geopolitical, and financial factors. But to help, here's a breakdown of the forces at play, what many analysts are currently expecting, and a reasoned view, factors that can push gold price up or down, drivers that tend to push gold higher. 1. Lower real interest rates. Gold yields nothing, so when yields on bonds after inflation fall, gold becomes more attractive by comparison. 2. Inflation/currency debasement. As inflation erodes the purchasing power of fiat currencies, gold often acts as a hedge. 3. Safe haven demand/uncertainty. In times of geopolitical tension, financial instability, or market stress, investors may flock to gold as a safe asset. 4. Central bank and institutional buying. Many central banks around the world accumulate gold to diversify reserves. Heavy institutional demand can have a strong impact. 5. Weak U.S. dollar. Gold is usually priced in USD. If the dollar weakens, that tends to support higher gold prices in dollar terms. Forces that can push gold lower. 1. Higher interest rates/rising bond yields. If rates rise, the opportunity cost of holding gold increases, making gold less attractive. 2. Strong U.S. dollar. A strong dollar makes gold more expensive in other currencies, which can dampen demand. 3. Reduced risk/stability in markets. When investors feel confident, they might shift from gold to equities or other yield-bearing assets. 4. Supply increases/lower demand. If gold mining output increases or demand from buyers wanes, that can exert downward pressure. What analysts and forecasts are saying currently? Many forecasts remain bullish, expecting price increases, at least in medium term. For example, Goldman Sachs is projecting a rise to about 6% higher by mid-2026, citing strong demand and easing interest rate expectations. UBS has raised its target to $3,800 per oz by end 2025 and expects even higher by mid-2026. JP Morgan sees gold averaging around $3,675 per oz by Q4 2025, with potential to push toward $4,000 in 2026. Some forecasts see even more aggressive growth, e.g. some analysts expect $4,000 plus in the near term given geopolitical risk and rate cuts. That said, some of these are contingent on conditions, e.g. rate cuts, weaker dollar, continued demand. If those conditions shift the other way, gold could face pressure. My reasoned view: will gold price fall? I think a significant sustained fall is less likely in the medium term, 1 to 3 years. Given the current backdrop of monetary shifts, global uncertainty, and strong interest in gold. However, corrections or pullbacks are quite plausible, especially if central banks unexpectedly raise rates, inflation falls sharply, the U.S. dollar strengthens, or risk appetite returns strongly, pulling money away from safe assets. In other words, gold may not fall dramatically, but it might see periods of softness or consolidation.